Your bank is not your friend. It never was. Right now, your bank is charging you fees to hold your own money, paying you 0.01% interest on your savings, and simultaneously lending that same money out at 7, 8, even 24%. That's not banking. That's a business model built on your financial ignorance. And the worst part? The less money you have, the harder they squeeze you. But the moment you cross certain thresholds, everything changes. The fees disappear, the rates flip, the red carpet comes out. In the next 10 minutes, I'm going to show you exactly how your bank treats you at every level and how to use that against them. You've probably felt it without knowing what it was, that quiet frustration when you check your savings balance and the interest earned has something like 12 cents for the month. You're keeping $2,000, $5,000, even $10,000 in there, and the bank is paying you 12 cents. Meanwhile, the same bank just mailed you a credit card offer at 22% APR. According to a 2025 Bankrate survey, the average savings account at a big U.S. bank pays just 0.42% APY. That's not a typo. The Federal Reserve rate is above 4%. Banks are borrowing money from you at 1/10 of that. And you're letting it happen because nobody explained the game. You're not even mad at the right thing. You're mad at prices going up, at your paycheck not stretching far enough. But underneath all of it, the bank is quietly extracting wealth from you every single month. And the only way to stop it is to understand exactly how the system is tiered. And here's the part that actually made me angry when I figured this out. The banks know exactly which customers are worth protecting. There's a specific number, not your credit score, not your income, that banks use internally to decide how much to care about you. And almost nobody knows it exists. I'll tell you exactly what it is and how to use it in your favor. But first, you need to see what's actually happening at each account level. Let's make this real with actual math. Say you've had $5,000 sitting in a Chase or Wells Fargo savings account for 5 years. At their average rate of 0.42% APY, you earned $88 over 5 years. Now take that same $5,000 in a high-yield savings account in HYSA at 4.75% APY. In the same 5 years, you'd earn $1,320. That's a $1,232 difference from the same money sitting in a different jar. You didn't work harder, you didn't take more risk, you just stopped letting your bank take advantage of you. Now multiply that across your entire financial life, and you're looking at tens of thousands of dollars lost to bad banking decisions. That's the cost of not understanding this system. Level 1, the $0 to $1,000 customer. You're a cost center. At this level, you are not a customer to the bank. You are a liability. Banks make almost no money off accounts with low balances, so they offset that by charging you monthly maintenance fees, overdraft fees, out-of-network ATM fees. The average overdraft fee at a big U.S. bank in 2025 is $27. Miss one transaction by $3, they charge you $27. That's a 900% penalty. And the banks that do this most aggressively are the biggest names: Chase, Wells Fargo, Bank of America. They all have accounts that charge monthly fees of $12 to $15, unless you maintain a minimum balance you probably don't have. So here's what you do instead. Open a free checking account at a credit union or an online bank. Chime and Ally Bank both have 0 monthly fees, no minimum balances, and no overdraft fees on small amounts. Credit unions are member-owned. They're not trying to extract profit from you. This one move saves the average low-balance customer over $300 a year in fees alone. At this level, the banks aren't your partner. They're just hoping you don't notice. Level 2, the $1,000 to $10,000 customer. Tolerated, but ignored. You've crossed the zero line. Congrats. But at this level, the bank tolerates you. They'll waive the monthly fee if you keep a minimum balance, but they're still paying you almost nothing on your savings. 0.42%. Remember that number? Here's what's actually happening at this level. Your bank is taking your deposits, lending them out as mortgages, car loans, and credit cards, and keeping the spread. You deposit $1,000, they lend it at 7% to a mortgage borrower, they pay you 0.42%, they keep the rest. That spread is their entire business model, and you're funding it. Here's what you should do instead. Move your savings, all of it, to a high-yield savings account. In 2026, the best HYSAs like Marcus by Goldman Sachs, SoFi, and American Express High Yield account are paying around 4 to 5% APY. Keep only 1 to 2 months of spending in your regular checking account. Everything else goes to the HYSA. You're still liquid. You can move money back in 1 to 2 business days. But now your money is working instead of funding someone else's loan. The difference between levels 2 and 3 isn't just money. It's how the bank starts talking to you. Level 3, the $10,000 to $100,000 customer. Now they notice you. Something shifts here. You start getting calls, emails, preferred customer offers. This isn't because the bank suddenly cares about you. It's because at this balance level, you are actually profitable to them, and they want to keep your money parked with them. The pitch changes too. Instead of basic savings, they start offering you CDs, certificates of deposit. Lock your money in for 12 months and we'll give you 4%. Sounds great, right? Except the best HYSAs are already paying that with full liquidity. A CD locks your money, and HYSA doesn't. Don't take the CD pitch. Keep your HYSA. At this level, you also become eligible for premium checking accounts. Chase Sapphire Banking requires a minimum $75,000 across accounts. No fees, better rates, priority customer service, and a direct line that doesn't put you on hold for 45 minutes. But here's the real move at this level. Stop leaving money idle. Money above your emergency fund, 3 to 6 months of expenses, should be invested, not sitting in a bank, not in a CD, in a Roth IRA at Fidelity buying VOO, in a 401k capturing your employer match, in a taxable brokerage buying VTI. The bank wants you to feel comfortable at this level. Don't get comfortable. Keep moving up. Level 4, the $100,000 to $1 million plus customer. The rules completely change. At this level, you are no longer a customer. You are an asset. The bank assigns you a personal banker, not a call center rep, an actual human being with their direct number. Your mortgage rate is lower. Your loan terms are better. Your fees are gone, sometimes entirely waived. At $1 million in assets, most major banks offer private banking. Chase Private Client starts at $150,000. Bank of America Private Bank starts at $10 million. The minimum to get real private banking service is moving lower every year. At this level, banks compete for your business. They offer investment management, tax planning introductions, estate planning referrals. Services the average customer pays thousands for, come packaged for free. The interest rate on your mortgage? Negotiable. The rate on your business line of credit? Negotiable. They'll waive origination fees, annual fees, and penalty fees without you even asking, because losing your account costs them. This is the tier the bank never tells you about on their website, and the only way to get here is to stop funding their business model at every level below it.
Here's what nobody tells you about this. Most people think you need $1 million before banks start treating you well. That's not true. The real trigger isn't your total balance, it's your profitability score. Banks use something called a customer profitability model, an internal score that measures how much revenue they make from you. Credit cards with high balances, mortgages, auto loans, investment accounts, each one adds to your profitability score. A person with $200,000 in deposits who also has a mortgage, a credit card, and an investment account with the same bank is worth more to the bank than someone with $500,000 in deposits only. So the trick isn't just to save more, it's to consolidate strategically. Move your mortgage, your investment account, and your savings to the same institution. Ask what relationship benefits you qualify for. At Bank of America, having 3 or more accounts moves you to preferred reward status. That unlocks higher interest rates on savings, credit card reward bonuses, and fee waivers, starting at as little as $20,000 in combined balances. You don't need to be rich to start playing this game. You just need to understand the rules. All right, 3 moves this week. This week, do these 3 things. Number 1, check what your current bank is paying you on savings. Log into your account right now. Look for the APY on your savings account. If it's under 1%, you are losing money in real terms. Open a free high-yield savings account at Marcus by Goldman Sachs or SoFi today. Both have no minimums and no fees. Transfer everything above your 1-month spending buffer there. This is the fastest single move to stop your bank from extracting value from you. Number 2, check if you qualify for any relationship benefits at your current bank. Call them or log into your account and search relationship rewards or preferred status. At Bank of America, preferred rewards starts at $20,000 in combined balances. Chase Sapphire Banking starts at $75,000. If you're close to a threshold, consolidate to hit it. You'll get higher savings rates, reduced fees, and better loan terms immediately. Number 3, if you're investing, don't keep uninvested cash at a big bank earning nothing. Open a Fidelity account at fidelity.com. Their default cash sweep earns a real rate, or use M1 Finance, which sweeps your idle cash into money market funds automatically. I've linked both in the description. Every dollar sitting idle at a big bank is a dollar working against you.
Now you know exactly how your bank treats you at every level, and more importantly, how to stop funding their business model with your ignorance. But here's what we didn't cover. Everything we just talked about is tied to one 3-digit number, your credit score. At 500, banks charge you more for everything. At 800, you get the same treatment as the $1 million customer. And most people are doing things right now that are silently destroying that number. That's the next video.